So interest rates just went up. Again. On Wednesday this week, the Bank of Canada announced that they are increasing the overnight interest rate by 0.25%, so 0.25%. It is the 8th consecutive interest rate increase that we've seen in Canada. So I can speak for all Canadians when I say, hey, Bank of Canada, it's getting old, getting old. A few silver linings, however, to this announcement. First of all, 0.25% interest rate increase is the smallest increase that we've seen since March. Bank of Canada has also signaled that they expect this to be the last interest rate. Their language was that they're going to press pause on these interest rate increases for now. And again, we hope that this is the last one. They never use definitive language, but it sounds like the plan is to stop raising interest rates. Inflation has actually started trending down a little bit, which is the whole point of these interest rates. We're now at about 6.3% inflation. We've still got a long ways to go from our target of about 2%. However, it's better than where we were in June, which was about 8.1%. Last but not least, there are many economists who are predicting that we will be in a recession by the second half of 2023, so that's not great. However, these same economists also are predicting that the recession won't be a particularly long or severe one. Many are predicting that by the start of 2024, we'll be coming out of the recession, and they are also predicting that that's around the time that interest rates will start to come down, which should spur the economy, and I can tell you it will definitely spur the housing market here in Ottawa. Speaking of the housing market, what this interest rate increase means to you if you have a variable mortgage is that your mortgage is now 0.25% higher today than it was at the start of the week. That translates to about $15 more in payments for every $100,000 of mortgage that you have. So if you have a $500K mortgage, that mortgage is costing you about $75 a month more today than it was at the beginning of the week. If you have a fixed rate mortgage, you're good. Things haven't changed for you. Your rate has stayed the same. That's how fixed rate mortgages work. Speaking of rates, fixed rate mortgages are actually cheaper than variable rate mortgages right now. That's fairly rare, something we haven't seen in a long time. Most of the big banks are offering about 6.25% for a variable mortgage today, whereas those same big banks are typically offering about 5.4% on a 5-year fixed mortgage. Tough times, it's been a tough year. I know it's very frustrating to keep seeing these interest rates go up, but hopefully there are better times around the corner. One of my favorite cliches in times like this is that tough times don't last, but tough people do. Also live, love, laugh, dance like no one's watching, always stop and smell the roses. And Andrew, what's your favorite cliche?
I don't know any cliches.
He doesn't know any cliches. He's too busy editing videos. So anyways, I hope you found this informative. Of course, it's a lot of information. If you have questions about your specific situation, if you're really feeling the pressure of these interest rates when it comes to your housing situation, I'm more than happy to sit down, have a coffee, or talk strategy with you over phone. I promise my advice isn't just going to be you should sell your house. Okay? So we'll look at your situation and we'll find the right strategy for you to get you through this and hopefully get you on the other end. So feel free to DM me, book a call with me, book a discovery session, and we'll go from there. I'm Serge Papineau. Don't forget to like and subscribe. See you next time.